When it comes to investing, the first thing which comes in mind is mutual funds. Mutual funds is considered to be one of the most transparent and regulated industry. It is also the fastest growing industry. Last year, mutual funds added many new folios. Folio number is a unique number identifying your account with mutual fund. It is like a bank account number. Therefore, folio number is an account number with that mutual fund company. According to data, the number of folios with 45 mutual fund houses rose to 9.43 crores from 8.71 crores in just 1 year. Even more exciting thing is that they registered a gain of 72 lakhs. Let's straightly know about the top performing mutual funds in India which gave good returns. If you are looking for high return and you want to invest it for at least 4 years, then Quant Active Fund is best. You know why it is a good fund? Firstly, it is a multi-cap stock, which means that they are diversified mutual funds. Their portfolio consists of large cap, mid cap and small cap stocks, and also should have mandatory allocation of 25% in each of the above stocks. Coming to the point, this fund is a 5-star fund, which is a plus point. When it comes to past returns, this fund gave rupees 2,06,456 return in a span of 5 years. But if you invest 2,000 rupees in every month, which means that you will get 22.6% return. This fund has an expense ratio of 0.57%, which is less than any other multi-cap fund. There is no exit load and no lock-in period associated with this fund. The next is Mirae Asset Emerging Blue Chip Fund. It is a large cap and mid cap mutual fund scheme. This fund is also a 5-star rated fund. It is the best option for medium term investors. The funds have doubled the money of investors in 2 years. This fund has ability to control losses in a falling market, which is a plus point. This fund gave rupees 2.07 lakh approximately in the span of 5 years if you invest 2000 every month. This fund gave 22.0% return in. The expense ratio of this fund is 0.64%, and if you redeem your investment money within 1 year, then you have to pay 1% as exit load. There is no lock-in period. The next is UTI FlexiCap Fund. This fund is a multi-cap mutual fund scheme. This is also a 5-star rated fund. The funds have doubled the money of investors in 2 years. When it comes to return, this fund gave consistent returns and their consistency is higher than most mutual funds of its category. The funds gave rupees 1,80,833 return at the end of 5 years. If you invest 2,000 rupees every month, they charges 1.22% as its expense ratio and 1% is the exit load if you redeem 10% of your investment money within 1 year with no lock-in period. The next is Tata Digital India Fund. It is a sectoral technology mutual fund scheme. As the name suggests, this fund primarily invests in equities of technology companies. This fund is a 4-star rated fund. The fund has majority of its investment in technology, services, engineering, communication, etc. For the past 5 years, the fund gave rupees 2,08,304 rupees if you invest 2,000 rupees monthly, which is 22.9% return. The fund has an expense ratio of 0.89%, which is less than its peers, with exit load of 0.25% if redeemed within 30 days and no lock-in period. The next is Canara Rubeco Blue Chip Fund. It is a large cap fund. Blue chip funds or stocks are well established companies with excellent overall financial performance. It is also a 5-star rated fund. For the past 5 years, this fund gave rupees 1,84,128 rupees. If you invest 2,000 rupees monthly, this fund has an expense ratio of 0.48% and 1% exit load if redeemed within 1 year with no lock-in period. The next is Parag Parikh FlexiCap Fund. It is a FlexiCap fund. FlexiCap are similar to multi-cap schemes, but the only difference is that the multi-cap schemes have mandatory allocation of 25% in large, mid and small cap stocks. Here there are no restrictions. This fund is also rated 5-star and the funds have doubled the money of investors in 2 years. In the span of 5 years, if you invest 2,000 rupees monthly, this fund will generate 1,93,104 rupees. This fund has an expense ratio of 0.91% and 2% exit load if redeemed within 365 days and 1% if redeemed after 365 days but before 730 days. That is after 1 year and before second year, and no lock-in period. The first question is, should you invest? See, market fluctuations will help the investors to earn good returns. Also, this is a good time to increase your investment, and you can also add equity stocks to your portfolio at this situation, because this will give you good returns when situation gets normal. Some strategies are: the first is to redeem your money if you have made good profits. But market crash is the best time to invest and again continue SIP. Then you should invest more in this situation? The answer is yes. Did you know this? Investing during the darker days always see growth in the long run. Hence, adding to your portfolio will give good returns once market resumes. The best investments are blue chip stocks, debt funds, index funds, mutual funds. If you want to know about mutual fund strategies, then go and check out the video. There I shared about the meaning of mutual fund, its types and strategies of investing in mutual fund. The second is portfolio rebalancing. It is important. This will ensure that your portfolio is well diversified. To make a balanced portfolio, you can use the above set strategies. That is blue chip stock, debt funds, index fund and mutual fund. Let's discuss about them. Blue chip stocks are good investment option as they are not affected much by the market movements during market crisis. This stock offers stability. Debt funds offer fixed return. This will minimize your risk. Index funds tracks popular stocks in Sensex and Nifty. These funds invest within top companies. So, this will also reduce the risk to some extent. Mutual funds is also a great way as it offers diversification and also some amount of risk is also associated with the fund. The last option will be stocks as it has much risk. Since you have a diversified portfolio, you should not worry much about. If you want to earn good returns, then don't follow herd mentality. This is the third and important strategy. You shouldn't invest because your friend is investing or your neighbors are investing. They are earning good returns, so you will also earn good return. It's not like that. Just invest with a strategy.